My name is Rishabh Sachdev and I'm a student of Masters of Finance at Griffith University. This video is a part of my research on alternative investments, which I'm doing on behalf of Q10, a large asset management firm which recently experienced lower returns from the equity market. The agenda of this report would cover an introduction, which would include the purpose of the report, the rationale of the alternate investment selected, the due diligence for the same, the literature on alternative investments, a review and analysis on the alternative investments selected, and a recommendation. To start with, let me just give you the purpose behind this report. The purpose behind this report is to research and analyze the alternative investment opportunities, the hedging strategies against market returns, and the performance measures of alternative investments selected based on characters like risk, due diligence, and other pertinent considerations. Moving on, let me just talk about the rationale of the alternative investment selected. The alternative investment industry is intensely rooted in a global financial system and economy, with investment decisions affecting capital markets, companies, and individuals across the world. The alternative investments selected for my research are real estate and silver as commodity. The below figure reflects the allocation of funds into various alternatives around the globe. As you can see, real estate being the highest, 35%, and 4% in direct private equity funds. Talking about the due diligence can be defined as the investigation of potential investment to confirm all facts relating to the same before entering an engagement with another party. Following is the checklist for suitable rates for due diligence purposes, which include the returns, the risk aspects, the management controlling the fund, the liquidity, taxability, valuations, and the transparency of information in the market. Similarly, following is the checklist for commodities funds for due diligence purposes, which includes the materiality, the hedge, management again, the service provision, which talks about any sort of technical support, the research services, or any sort of such services related with the fund, the financing arrangements, and the insurance. This section of the presentation talks about the literature of the alternative investments, which basically talks about the features of the alternative investments selected for my research. First one being real estate is highly liquid in nature, has high dividend yield up to 90% of its returns, has a low correlation with other market instruments like stocks, bonds, etc., and facilitates portfolio diversification. Below figures basically show a comparison of the real estate index returns versus the S&P returns and the real estate returns versus the ASX 200 returns. And as witnessed, the real estate index returns are higher than the S&P returns and the ASX returns over the last 10 years. Similarly, talking about commodities are also highly liquid in nature, have low correlation with other market instruments like stocks and bonds, also facilitates portfolio diversification, and also acts as a hedge against inflation and traditional asset performance. The below figures also talk about also reflect the commodities returns versus the S&P 500 returns and the commodities return versus the ASX 200 returns. Moving on to the review and analysis section. The review and analysis is basically facilitated by using a 5-year historical data of the S&P 500 index returns, the ASX 200 index returns, the real estate index returns, and the silver's futures commodities returns. After doing an analysis on the same, comparing the results of the same, we could conclude that real estate returns were close to the returns of both S&P 500 and ASX 200 returns as a whole. The risk in investing in real estates was lower than investing in silver as a commodity. There was a negative skewness which was witnessed in the case of real estate, as not always it can be normally distributed. Uh, if we talk about the correlation between the indexes, we could witness that real estate and S&P 500 index had a very low correlation, which was beneficial for portfolio, which can be beneficial for portfolio diversification, as real estate is assumed to perform better during financial or economical distress. A negative correlation was witnessed between ASX 200 and the real estate index. Similarly, a negative correlation was also witnessed between S&P 500 and the silver index, even with the ASX 200 and the silver index. Low beta was witnessed between real estate index and the S&P 500 index. States that there is the risk involved in investing in real estate is slightly lower than investing in usual stocks or bonds in the market. After concluding all this, my recommendation to Q10 would be that REITs, being more liquid and transparent than silver, have higher growth in future, are more lucrative in nature, and there should be and the company or the firm should definitely invest in REITs rather than commodities, being silver or maybe other commodities existing in the market. Thank you.